Q3 numbers. Sanjay, good morning. Fantastic to connect with you. Sanjay, my
Yeah, good morning.
compliments. You've managed to prove your critics wrong, because when I read your Q3 numbers, a lot of brokerages
Yeah.
came out and they said elevated OPEX, low interest income, and we will cut our estimates. But those two matrices, which is the low interest and the low non-interest income, and the entire update which is there on ROE has actually improved.
Correct. Yeah, Nikun. So I think, as you told in your opening remarks around the Indian democracy, that you can't expect, anything so quickly, right? So I think we were in BFC for 22 years. So it takes some time to, understand this platform, understand the whole challenge, opportunity, and do the execution. So Q3 was one of the event, which we can't control. It was beyond our control, right? And but I think the team has shown a lot of resilience, a lot of character in last quarter 4, and we are again back with our original as a NBFC avatar than a bank avatar, and our focus is more on to do inclusive banking, which is semi-urban, rural areas where largely our competition remains with NBFC. We have to build a decent franchise around deposit, because if you can't build deposit, there is no fun running bank. So our overall metrics in terms of our growth around asset is around 50%, and that's because it's of our lower base. And we are able to build incrementally. We built around 17,000 crore of deposit in 2 years, which is largely funding our incremental assets. Our yield is shaping up well. Our OPEX, which was on a higher side, which is very natural because of its transition time. So I believe that as a bank, we are shaping up well. And as you know that, quarter 1 of this year, after post-election, lot of reform, lot of focus on businesses should come back. And I think that the best time of AU will start from maybe this year end, or maybe maybe quarter 3, quarter 4 of this year itself. So that's the way I think, and I think I should consolidate to entire our team, the stakeholders, the entire customer base to support us in this journey.
I think your ROE and ROA will settle for FY20.
Yes, more or less. Again, I will say that, Nikunj, this transition will take some time, and there are a lot of moving items which we do not know as an executor of this bank, right? So, but we have to take it every day. So largely, I believe that we have addressed everything to the extent. But so if you're able to, figure out that there is no surprises at all in our journey, in terms of regulation, in terms of something which we do not know. So I'm not talking about the asset quality. I'm not talking about the cost of deposit. I'm not talking about the operation cost. It's beyond that, right? So largely our trajectory is now settled.
Okay. Anjali, what's happening to your pure retail NBFC business? Because you don't seem to be impacted by what we are seeing otherwise across the board in terms of the slowdown. When it comes to deposit growth, your loan growth, disbursements, everything seeming to be strong. And, I'm sure you'll share with us the outlook going forward as well. But just talk us through the pure retail NBFC business.
No, so our DNA is NBFC, right? And that's the way we have to build ourselves. So our asset strategy is very simple. We don't want to compete with higher end of the customer. It's largely the way we operated last 20 years. So our wheels business is growing by 35%. Our SBL business is growing by 40%. Our the other retail aspect like housing loans, the consumer durable, the other things around it is growing pretty decent, right? And we really want to focus in this retail, and the SME and mid corporate is more of a long-term strategy for us. We have again started we are actually working on our digital asset lending also. So I think this will shape up in next 8 to 12 quarters, and it will remain our focus. The advantage for us being in retail space is that you can price your the assets, you can increase your yield. It's actually de-risk yourself from any asset concentration, any geography concentration. We don't have a large book. So it's a pretty to be good in that space. And if you can build retail asset, so the advantage we got is to build retail deposit also. So the whole idea, the whole focus is to build retail deposit, and that does not come easy. It has to be more go-to-market strategy. We need to build right technology, right people, right product offering, value proposition for people to come and bank with us. But in eventuality, we can do that because we have built retail so well in last 25 years, 24 years. So the idea is just a timing, right? It might take some more time. And the challenge remain around deposit can be the cost of deposit, which beyond a point is not in our hand. It's more of a market driven, right? So largely I believe that we will achieve all these things, barring 1-2 more challenges which we need to address on a timely basis.
Agarwal, you're sounding very optimistic and confident. Does that extend for your CASA growth as well? I understand the CASA ratio at about 21%. How hungry are you for, bettering your overall CASA growth?
So I will also want to give you one more data point that, a car is a very different story. It does not come easy because we need to build brand, we need to build value proposition to build car. So I think that journey around CA, which is current account, will take more time, But I think SA and retail deposit, which is our prime focus, if you really see in our 17,000 crore of book, this consists of around 40%, and that's the way the whole focus is. And SA and retail deposit does not have much difference in the cost of fund also. So, but this only will come when our whole retail franchise will shape up. That means that, we need to have people on ground. We need to have supported by them by the very well organized technology. We need to build brand. We need to have that attitude of, who has more hungry, who has more purpose, right? So that's why we want to say that, our retail deposit, which is around SA and retail deposit, is our more focus area in next 8 to 12 quarters.
One of the large reasons why NBFCs were growing is because PSU banks did not have the ability to lend, and private banks were going through this process of deleveraging their NPAs. But now CASA ratios have stabilized for the large 2 or 3 banks. Your cost of borrowing, your cost of taking CASA will always be different than what the established large banks have. Could that have an impact on growth? Could that have impact on your spreads?
No, Nikunj, so you have to also define which large private sector bank, the big guys, we don't want to compete with them because they're also not in the markets which we operate as an asset, right? So our deposit in last 2 years is around 7.2, which in my opinion is not largely elevated. The recent the private sector banks who's also maybe operating around maybe 7%. So I don't believe that we are running on a higher deposit cost, and it is a phenomena because of this recent events. So but we have the ability to deploy at 15% plus. So I think the people has to back us and see us that whether AU has the ability to deploy this kind of money at these rates, right? So I think if we can decode this lending more on these markets, then we are not too worried about our cost of deposits.
Sure. Sanjay, now you seem to be clearly saying that you're in investment mode. Like, talk us through what kind of investment mode, let's say over the next 2 years, what the plans are. You're not following the traditional trajectory of a bank, obviously. So, just talk us through what could possibly be the strategy, and also, aren't you taking perhaps a high element of risk to deploy at 15% plus?
No, so I think one thing which is very evident in AU journey is we challenge status quo. So in terms of our branch expansion, I personally believe that old traditional way of building branches are not right way, or maybe we want to explore more on that. And so we want to build very deeply penetrated, low-cost branches, maybe owned by us or through BC, or maybe around some other method, maybe a digital method. So our cost of investment or our investment cost as we move forward will not be so high. We want to take every step after a lot of discussion and a strategy around it. And I believe that we are walking on that path. We haven't opened a single branch in last 2 years, and we have grown our book to 17,000 crores, right? And we are growing our asset by 50%. So the need of the branch, the need of investment has to be on table rather than deciding on just on the feedback or on the pushback from some quarters, right? So our expenses cost to income is around 60%, and I believe that has been peaked. And from here onwards, our cost of income will go down, and that is the way we want to build ourselves in terms of branches and look after our OPEX. And more importantly, this is also a wrong phenomena or a wrong perception that anything more than 15% is a risky asset. We are into this business from 22 years. Our NCL for this year is also close to zero, right? So I don't think that it's about the pricing which makes account risky or non-risky. It's about how you judge the customer, how you deliver him the loan, how you actually collect the money, and how whole design in the organization work in a one way.
And give us some flavor then, Mr. Agarwal, on your corporate retail growth, because ultimately this is where you see a decent amount of growth coming in. So what is the strategy? What are the projections here?
So I think, of course, again, it has a base effect, but largely we have to do 75% priority sector. Our 50% loan has to be lesser than 25 lakh. So these two principles will drive us more retail than in wholesale. I believe that our 80-20, 80 has to be retail and 20 has to be maybe SME and mid corporate is the story going forward.
Closing comments, and I've never asked you this before. I'll take the liberty of asking you this one upon. If I look at the shareholding pattern of AU, the promoters have a very large holding. Over the years, the stake has got diluted because you've raised capital. But as you will grow, you will be raising more capital. Are promoters committed to maintain their stake at the current levels, or as the business will grow, obviously you would not like to participate and let your stake get diluted?
No. So if you're asking me personal question, I have already shown to the corporate world that I'm not too sticky around my stake. For me, bank is important. This franchise is important, and we'll do whatever required to build this franchise forever. That is why we are saying, today, tomorrow, and forever, AU Bank has to survive, right? And AU Bank has to be relevant. So, and I think there are certain guidelines around RBI. My 26% stake has to be locked in for up to 22. So post that is free. We can raise any amount of capital, and so for personal level, I will do whatever this organization is required to build it forever.
Appreciate that. Good luck and thank you for joining us.